Hi, everyone. Thank you for joining us today. We share real stories of successful companies who use ESOPs or employee stock ownership plans as an alternative to selling the company to a third party. To kick things off, some quick introductions. I'm Trevor Gilmore, CEO of Menke, and I'm joined by my colleague, Ben Spadt. Ben, give us a quick introduction, please.
Sure. My name is Ben Spadt, and I'm an ESOP investment banking consultant with Menke as well. I've been in the game for about 10 to 15 years, everything from valuation to transaction work, which brings me here today.
Thanks, Ben. And today our guest is Dave Jaeger, CEO of Legacy Utility Group. Dave is a second generation owner of the company and has ambitious goals for the company and himself. Legacy Utility was at a crossroads that a lot of founder led contractors hit, which is ESOP versus private equity. What do you do to take the company to the next stage? They're also running EOS, which is called Entrepreneur Operating System. Today, we unpack what that really means. Now, let's go ahead and kick things off there. Dave, can you give us a quick introduction?
Yeah, I'm Dave Jaeger. I'm the CEO of Legacy Utility Group and also NorCal Pipeline Services. I've been in the business for my entire life.
Awesome. Thanks, Dave. In one sentence, what ownership decision were you facing last year when you decided to embark down this ESOP path?
Yeah, for us, it was how to create a long-term plan that meets the needs of both partners, myself and my father.
That makes a lot of sense. And what sort of ownership options did you explore before zeroing in on these?
Yeah, so we looked into private equity and then just didn't really find that to be a fit. And then looked into ESOP, just doing a feasibility study to see if we would even qualify. And short year later, we transacted.
That's great. So you took a look at a couple different options, went down the ESOP path, feasibility, and so on. As you looked at the ESOP option, were all shareholders on board with that? And what did that process look like?
Yeah, for us, it was there's a lot there, right? So when we were comparing private equity to ESOP, the issue for us with private equity was I wanted to make sure I took care of the people that got us to where we are, and I didn't really see an avenue, quite frankly, with transacting a sell or an M&A, versus ESOP created an opportunity for us to take care of the team that got us to where we are and helped incentivize us to go forward. The appeal for my partner was the long term ability to finance, was the liquidity and the de-risking for him, was paramount in why it made sense for him, and then for me it created a long term plan. I remember when we transacted 9 months ago, the first thing I thought of was for the first time in my life I feel like I have a 10-year plan. Being a business owner for so long, it seems like, especially in the early stages, you're living day to day and week to week. And here we fast forward almost 20 years later of doing this, and finally it felt like, okay, here's that 10-year layout of what this is going to look like, and now we can really hit the nose and put our nose down and grind to get to where we need to be.
That's great. So helping you to create a 10-year plan here, and it's a lot of objectives as well. The first generation liquidity, spreading ownership amongst the employees, and really aligning everyone's interests. So so far win-win. Let's take a step back here and talk about the story of Legacy Utility Group. It's a great one. It's a great business story here. If you can give us a say 60-second overview on the history of Legacy and how the company started, and how you went down this growth path and to land where you are today.
Yeah, so 20 years ago, roughly, my dad and I started a company called NorCal Pipeline Services and named it NorCal, thinking small and geographically. And as things progressed, we were lucky enough to be in an industry and have some good relationships that helped us grow really quickly, expanding throughout California initially. And as things progressed and we got a little bigger and a little bit bigger as a company, we decided that we wanted to have the opportunity to expand outside of California, and really didn't feel that having a California-based name made a lot of sense. And so creating legacy utility group with other entities that I own, creating a holding company that the employees could all be a part of, and bring all of the entities that we own together, and then offer expansion outside of California into other markets, and taking that infrastructure that we built with NorCal and applying it to other entities, whether we do M&A or organic startup in other states and other parts of the country.
That's great. And to put it in context, I was on the Pacific Coast Highway down here in Southern California a couple of weeks back, and I saw one of your trucks, doing
Oh,
work.
nice.
So it's you see it all over California, right? And
Yeah.
it's one thing talking about the company, on these calls, and it's another thing actually seeing you all in action, and that was cool to see. It's coming back from
Yeah,
a
on
bike
that
ride.
note, we actually we were able to work for another company you transacted with, Toro as well. Another ESOP company. Our team kind of pushed into there, leaning on the relationship aspect of the ESOP, and was able to do a little bit of work with them up towards Ventura.
Toro, that's great. Yeah, they do a lot of highway work here in Southern California.
Yeah.
Yeah. Yeah. So, thinking long term, where do you want to win in the market? And then that's question number one. Question number two is, what do you think your mode is, in terms of success? It's, people, service, there's all these different components that make up a mode. And obviously, legacy has a strong one. So, curious after going through this process, what that looks like for you all, if that's changed at all.
Yeah, I think for us, I mean, your first question, where do we win in the market? I think once people meet our team, we lead with service and building long-term relationships. That's been paramount, and it's how we got started. And I think that's also our moat, because customer trust creates repeatability of delivery. So, for example, if a GC or a city or a utility that we're working for has been burned before, what they're buying from us isn't necessarily the service, but it's the certainty. You show up when you say you are, you solve the problems without drama, you document cleanly, you don't create downstream risk for them. That trust creates a flywheel, and the trust equals negotiated work, which we become a preferred vendor. And then we create stable backlog, which means we create better crews, and it just starts to create a almost circular effect, right? Like I said, a flywheel.
That's great. So service, trust, that's basically the building blocks of, like long-term building a moat, on top of that, you think going ESOP to all those components that do a successful company, one whose culture can thrive under an ESOP ownership here.
Yeah, and
Going,
I think that's the hardest thing for like our competition to copy, because it lives in dozens of small behaviors. It's not necessarily on a brochure somewhere, right? It's those things that we're able to do to create those long-term relationships that really drives home the ability for us to service and take care of our customers the way they need to be taken care of.
yeah, and that also is reflected in company value too, right? 'Cause value is, art and science, right? Science, the numbers, what the company's profit is, the growth, and so on. The art, of course, is that, the moat, and can be hard to quantify, uh, but you know it when you see it.
Yep. Yeah, absolutely.
To quote someone famous. What would you say, Dave, is the biggest constraint to growth right now? Some factors out there: labor, capital, risk, bandwidth.
Yeah, I mean that's a great question. There's a lot. I mean, you could really do a piece on all of those. I think for us right now, where we sit, it's capital. Slow payment and the high cost of money makes it hard to scale a little quicker, because it's just, since I think post COVID, it's taken a little longer to get paid. And I see that universally, because especially in our market, we're like a second or a third tier sub. And so a lot of times, if whoever our GC is working for is getting paid a little slower, then there's a trickle down effect into us, into like, a couple weeks later and a couple weeks later. All the while we're oftentimes financing that, or just still waiting on payment while we have bills that go out weekly, right?
Yeah, exactly. It's all about cash flow, right? It's cash flow, cash flow, cash flow.
Yep.
If we fast
Yeah.
forward 10 years, with your 10-year plan here, when you look back, what would you say, like, hey, we nailed it, and you take a look at the last decade, time flies, right? So we're into
Yeah.
2025 now. So fast forward to 2035 at the end, you're looking back on that journey.
Yeah, it's. I was just having this conversation with my wife about how fast this 10 years is going to go by, and I think for me, if we have paid off our note and hit somewhere near our BHAG, and our BHAG is our big hairy audacious goal, and it ties into EOS, which is one of it's just our operating system, and it's something that the management team laid out basically as our long-term goal and our stretch goals for top line revenue and profitability.
That's great. So achieve them all, that's
Yeah. Yeah.
going to kick it over to Ben here. I know he has some questions about EOS and how that intersects with the ESOP. And
Certainly. Yeah. So thanks again, Dave, for joining us today. But you're on EOS, and we've kind of nibbled around what that means. But how did it change how you run legacy utility?
Yeah, that's a great question. So for us, it created clear lanes. Oftentimes, when you're building a family business and you're growing and you're small and you're taking these incremental steps, you oftentimes find that multiple people are working on the same thing and maybe at different degrees, or you're almost like a two-headed monster going for one thing when you really that's not maybe optimal use of time for people. So for us, as simple as it sounds, the first step was it laid out like more structure and it allowed us to, okay, you operate in this and I operate in that, which seems so elementary, but oftentimes when you're living in the day to day and you're in the weeds a lot, it can kind of get lost. And so for us, it created this structure that allowed our team to operate in what we call their superpowers and allowed them to operate in their lanes. And so I got, my operations working in ops and sales working in sales versus a little bit of maybe coloring outside the lines and getting in the weeds a little bit with each other. EOS kind of eliminates a lot of that or helps kind of highlight it so you see it a little bit more clearly to make the conversation a little easier when you see people that maybe are overstepping. It's all in good intent, but in reality, it's not really helping move the needle forward. The other thing it did for us is it gave us short-term and long-term goals. And so it's one thing to sit down and talk about, hey, we want to get here in revenue and we want to do this and do that. But in reality, you create like what I referred to earlier as a BHAG, which is for us is a top line revenue goal. And then there's also smaller 90-day, 1 year, 3 year, 5 year goals that you put inside of that box. And you create these to-dos and rocks that your team is working towards, which ultimately help you reach those 90-day, 1 year, 5 year goals that you've laid out. And so these small little achievements help go towards the bigger goal.
Absolutely. And so those periodic check-ins, if you will, whether it's a rock or a 90-day check-in that assigns some amount of accountability and also, I can follow back and say, look, here's what we've accomplished, but also here's what's yet to be done. And each one of those builds to a bigger end goal. And those rocks, as you described, seem to be pretty embedded in the way you operate now, but was there anything that you put it in place out of EOS and decided, holy cow, this really works for our company?
Oh wow. Yeah, so we're really heavily invested into EOS at this point. The rocks, obviously, our weekly L10s, which is they're just their weekly meetings. Every level of the company has their own L10s, right? So we've pushed it down to the second and third layer, so it doesn't just sit at management. We have those meetings, the same cadence, the same way the management meeting is run is the same way an accounting meeting is run, is the same way a sales meeting is run, the same way an ops meeting is run. The other thing is one of the first things we did is we created an accountability chart. It's basically a version of an org chart, and the accountability chart allows us to lay out the positions that we have within the org and then create what those top 3 to 5 things that we expect out of those roles are. And then it creates a realistic expectation for those individuals to know, hey, these are the things that are expected of me and my job. which like what you said earlier, Ben, was accountability. This helped drive that home. So it's right in front of them. They see like, hey, as a salesperson, these are the top 5 things that I need to be doing. And if I'm not, then I'm not probably not doing my job and not work here anymore, right? So
Yeah.
it creates a lot of clarity, I think, and oftentimes, as a quick growing company, sometimes you lack a little bit of that. And the other thing was it created we have their scorecards, which is data, weekly data, right? So it can be as simple as profitability or top line revenue or bottom line, gross margin and all these sort of things, right? Depending on the scorecards you want and the data you want to live and for your company that makes sense. For us, we have a handful of metrics, and then they change based on the L10. So what's important at the management level might be a little more granular at the operations level and might look different on the payroll meeting. And so all of our metrics are a little different, but it allows us to be working towards a goal. And based off our budget, we create goals and all these metrics that are accountable weekly. And so then the team knows, hey, we're not hitting this or we're not hitting that, or we're crushing it right now. And good job, everybody. Let's keep up the good work.
Absolutely. And I find it takes a little bit of fear out when you go in and meet with your boss because you're both
Yeah.
working from the same set of rules.
Yep.
And so, you spoke about those level 10s or L10s and how you've made them repeatable and essentially the same thing from management on down. So, that sort of leads me to the next question, which is if you disappeared, you, Dave Jaeger, disappeared for 6 months, what breaks first? And how has this EOS reduced the risk of, you get COVID, you're out, you break a leg skiing or whatever, or you just say to heck with it, I want to take a vacation.
Right.
What breaks first?
Honestly, that's that's a deep question. I feel like with us implementing EOS and the team we've been able to build around us by one having an ESOP, two being an EOS and the clarity that exists there. I really think the only real issue that we would have is I think culture would shift a little bit because I drive that and I try to
Mhm.
drive that. It's really important to me. And I also think that, and I'm not saying it would go bad, it would just change. The other thing is I'm our vision, leaning back in on the EOS model. I'm our visionary. So within that role, my job is to have big ideas. 5 to 10 big ideas a year, big relationships, and so that might alter the business if for that period of time. That's the only two things I can really think of.
Mhm. But on the day to day, you think that otherwise it's going to essentially operate as normal. The only thing, the visionary's gone, and the culture warrior, if you want to call it that, is absent for that
Yes.
6 months.
Yes.
Okay, so we're running the risk of making this a sales pitch for EOS, and so we'll bring that back to an ESOP discussion. So, EOS has a huge impact on culture, but it does take people driving it like you. And we found that, ESOPs are a great fit for companies with a great culture, great leadership structure, things like that. Um, but at the end of the day, you're selling the company to your employees. So why did the ESOP rise to the top as a serious contender?
I think for one of the things I already alluded to was for us, it was allowing us to take care of the team to help get us here, right? So, um, if you rewind for me, 10 years, and we started getting approached for M&A, and it was always flattering and one of those things that you never really thought of when you started a business. It was never our goal to sell it. It was always just to build something unique and try and take care of ourselves and the team around us. And so you start looking at M&A, and I always had the conversations and would sit down with people and really pick their brain and understand what they were looking for and how I can be successful in their eyes and those sort of things. And I always looked at it like, well, they already have a me. They already have a payroll person and a safety person and an ops guy, and they have this and they have that. So they're just going to come in and they're going to move on from my team, and they're not going to need me. And then I also thought, well, I think I could do a model of what they're doing on a smaller scale. Maybe I don't have hundreds of millions of dollars, but if I
Yeah.
could I felt like I could probably maneuver in such a way that maybe I could take what I've done and the infrastructure that I've built and maybe push that on to other entrepreneurs that maybe needed that next level of help to take their company to the next level and somehow be a part of that, whether that was on a consultant basis or through acquisition of my own. But the other thing was, is, you know, when it came back to the ESOP thing for us, it really was what I felt like, and I think I've told Trevor this a handful of times, it was a win-win. And so it created tax, there was a tax component for my partner that helped out, right? There was some liquidity, and then the taking care of the team and the 10-year plan, right? And so there came a point where it was like, okay, I'm 45 years old. At some point, if we didn't have some sort of plan, there's no heir to my to me. And so, like, my daughters are really little, and they weren't going to probably make it into the business before I wanted to retire. And so if at all, if they ever wanted to. And so I was trying to figure out what was that plan going to look like so we could recruit better talent, and also knowing that, like, somebody, you know, was going to come in and need a long-term goal, and what would that look like, and how would we create that for them. And so when it came time for the ESOP and we checked the boxes, and we were able to meet the minimums and create something going here, it just made too much sense. Like I said, it was a win-win. My partner, was able to transact and get some freedom and de-risk. And then I was able to lay out a 10-year plan, which has allowed us to recruit better talent. It's allowed us to, like, maintain people in-house and allow them to go, okay, this is where we're going. Like, it's created a level of excitement around the office whenever you start talking about it, and we're able to start really bringing it together. You can see that people are excited about what the potential is, that now they get to have a stake in ownership of where they work. It's not just a job anymore.
Absolutely. And so, you know, you mentioned acquiring talent as part of that and part of your 10-year plan. When you do acquire talent, you know, it's a highly skilled industry. It's a very highly competitive industry for attracting and retaining talent. Do you feel that and you're pretty early on, but do you feel that the ESOP can act as some sort of incentive? You know, yeah, we may pay you the same as the guy down the street, but here's this added benefit. Or is it really resonating?
A mix of both. I think it requires a deeper conversation. There's a lot of people who maybe have heard of it but don't really understand it. And so what I was able to do was I just created an open invite Calendly, and then also created an email internally that basically any questions, just shoot them over. And if I don't know the answer, I'll reach out to Trevor and say, hey, this person's got these questions that pertain specifically to them. Can you help me get the answers? And Trevor and the team at Menke have been really helpful in facilitating those answers. As far as recruiting goes, yeah, absolutely. I mean, it's just in the interview process, me being the most involved with the ESOP transaction from day one. Whenever I'm in an interview and people ask about it, I'm always the person, the SME on site at that point.
Mhm.
And people ask me, you know, to explain it. They ask me to what it looks like for them, and what's the vesting like, what's the long-term goals, what's a potential, you know, story that I've heard or know from testimonials from people that have been in ESOPs, and potential return on investment, and then they ask how much they have to pay, and I'm like, you don't. And so all these things that all play into it, right? So it's been fun. It's exciting. You can see it gets the wheels turning, and it gets people, their creative mind going, and it's fun. It's fun to be a part of.
Absolutely. Yeah. You know, we've talked a lot about all the good things that an ESOP can bring, but is there a risk to you of implementing this ESOP, this plan, whether it's, you know, we're going to have to buy those shares when people retire, so there's a repurchase risk. Is there, you know, the cyclical nature sometimes of hiring, laying off that, um, and then, you know, profitability swings with cost of goods sold, things like that. I'm just outlining, you know, these are brainstorm ideas, but is there a risk to the ESOP that you are afraid of at this moment?
Uh, Afraid, no. I mean, I think ultimately the conversations that are had at a management level revolve around the fact that we have a debt, right? And that we have to pay it off. and we have to operate in such a way that it needs to be paid, and we want to try and pay it before it's due. And so we have a 10-year note roughly, and we're trying to pay it off in 7, right? And so we want to be aggressive and be thoughtful with the debt that we have, and make sure we are mindful of the fact that we have this debt that we need to pay off, and operating in such a way that we maintain gross margin and do things like that. So yeah.
Yeah, it seems to play in with a lot of those goals, your 10-year plan, perhaps some of your rocks, your 90-day goals, things
Right.
like that. Do you find that EOS has helped manage you through the transaction process as well as the implementation of the ESOP?
Yeah, with us for EOS, it gave us an opportunity to get data faster. It felt like we were living live. Every week, every Thursday, I have my management meeting, but there's meetings throughout the week, all week, for different levels of the business. And you have your scorecard, and everything is live, which then allows you to kind of run a little quicker. The more data you have, the faster you are. And in our business, we run with the elephants, and I always say, when you run with the elephants, there's the quick and the dead. And so we've got to move quick. And if we don't, then that's not gonna be good for us. And so we've got to stay ahead of it with the data.
That's absolutely right. And having that at your fingertips is very important. I'm going to kick it over now to Trevor to ask you some questions about the private equity side of this decision.
Thanks, Ben. And yeah, when you think private equity, right, there's a lot of different private equity firms out there. You have family offices. Basically that's the private investment arm of like a wealthy family, for instance, much more longer hold period. And you have the classic private equity funds, that flip in 3 to 5 years. You have others that want to do like a platform play, kind of roll up, and so on. So Dave, when we think about private equity, I know that you had some interest out there, over the years, right? Were Did you get serious with any of those offers? And if so, what kind of would have been criteria to possibly entertain some of those? And I know, of course, you ultimately went ESOP. You didn't go down a
Yeah.
strategic or combination type path. But I'm just kind of curious, comparing that pitch to the pitch of an ESOP, in essence. And
Yeah, I mean, so for me, I always had a growth and a mindset, right, and wanted to continue to grow the brand and get it bigger. And so for us, whenever we were approached by private equity, whether it was large competitors, or venture capitalists, or anything along those lines, they always came in. They wanted our market, and we had brand equity. They wanted the California market, which is a unique animal to do business in, and it's easier for them or anybody really to acquire than it is for organic startup. And so that was the approach and the appeal for them. For us, again, I knew that there would be a trimming of the redundant pieces, right? So things that they already had, they didn't really need. There would be some maneuvering of what I had built, and I just didn't feel like that was the right thing. I want to be able to look myself in the mirror at the end of my career and say I did the right thing, and no matter what that meant. And I just didn't feel like it checked the box for me.
yeah, we talked a bit earlier about using the ESOP, for recruiting and retention. And I know, the ESOP is, basically, almost a year into it now. Have you had any challenges? I know, of course, ESOPs are complex, very much long-term incentive plan, and it's a retirement plan too. It's a marathon, not a sprint in terms of building value and so on. Uh, Ben asked earlier if, employees would, value that, or if you've seen that, the employees actually valuing that, compared to just current cash compensation. As time goes on, along with the EOS and the 10-year goals, are you communicating the value of that long-term ESOP, to the employees? And if so, are they receptive to that, now that it's been almost a year in, and people are learning more and so on?
Much like anything, it's a mixed bag. We'll get team members that that totally have either been a part of one before and buy in and are really, really interested. You'll also get team members that have never done it, but are thinking long term. And then we have a mix of people that maybe we're gonna have to pull along a little bit more and keep educating. And we're just trying to meet people where they are and not try and push it so that it feels like too much, but also keeping them mindful and thinking like an owner versus an employee and why it matters. So continuing to use the resources that exist in the ESOP world. I think there's a couple of agencies that we're a part of, and they have good literature. Trevor's given us a lot of stuff, and that we've been able to share with our team, and just kind of continuing to feed it to them so that at some point some of these things will click in and they'll go, oh yeah, oh yeah, I read this, and oh, this makes more sense. And then you just keep feeding the conversation as opposed to me sitting down and just preaching to them all the time about it. I think keeping an open door and allowing people to have conversations, and then maybe water cooler talk and creating some things around the office that highlight it. We attended conferences. We've highlighted, ESOP Awareness Month, or ESOP Month, and then we also created committees internally to allow people to have conversations and talk about things and understand it a little bit better so that they can help facilitate questions and maybe become the local SME for their team of people, because maybe they're intimidated to talk to somebody at my level or Trevor's level. Maybe they want to just kind of talk with each other and their peers and ask questions, and then those questions get elevated up. So just trying to create a lot of open communication about it. And so it's something that people can really grab a hold of and be like, yes, this is good for everybody.
Yeah, the challenges you've described and opportunities, throughout this entire conversation, it's not unique. Like, all businesses out there are faced, with this, right? Ownership, culture, growth, right, and so on. So, when you fast forward to today, now that you've gone through the ESOP, you've implemented EOS, when you rewind, say, 2-3 years, what have you learned through the process that you would tell yourself, Dave Jaeger, like, let's say 3 years ago, before you even embarked down both of these implementations?
Yeah, it's funny because ESOP was part of our long-term goal, and we reached it a lot quicker than we thought. So it was one of the things we had talked about, even not knowing much about it. And so I think my advice to myself would be just to continue focus on the process and not the outcome. Continue to just keep going through it, be in the grind, do the day to day, keep doing the right things, and eventually those moments will appear that are like, this is the path. And I felt like that was when I reached out to you and I threw in like your application. And I was like, he's not going to email me back. It's like, we're not going to qualify. He's going to be like, what are you talking about? And then to get it back from you and be like, yeah, you check the box. And then you start having the conversations. And I was like, there it is. That's why I've been pushing so hard for these last few years. And that's why the PE aspect of it never felt right. It never in my gut felt right. And I got here by trusting my gut, and it just never ever felt right. And so, like, then the moment where I remember you emailed me back and were like, yeah, you qualify based on all of these things, as long as all this holds true and you're not lying to me, then you qualify for this potentially. Now let's see if we can structure this deal.
Great. And Ben, do you have any, I know we're coming up against time here. Do you have any final
No, I really
questions on your
like
end?
the trust the process takeaway. I think that's sound advice for multiple applications, not just when it comes to an ESOP.
Yeah, I think that's something that our team really is focused on, right? So the scoreboard stuff is great, and it helps you maneuver the business, but it doesn't always tell all of the story. So if you trust the process and you believe in what you've built from an infrastructure perspective, and you just continue to focus on that and never ride as the high or the low, and you just continue to be like, okay, like, the outcome is noise. Let me just focus on our process and really continue to build on that. It leads you to where you need to go.
What a perfect spot to end.
Yeah, so working on the business and in the business, two hard things to do at the same time, Dave. And over these past several years, you've done both. So we look forward to seeing great things from Legacy Utility over the next, 1, 3, 5, and 10 years. You're really building the building blocks for a successful organization.
Thank you. Appreciate you guys and your guys' help along the way. It doesn't go unnoticed that, having you guys on the team is definitely helps help us achieve those goals.
Well, thank you, Dave.
Thank you, Dave.
Well, Trevor, that was a great discussion with Dave Jaeger of Legacy Utility Group. I had a couple takeaways, primarily that, it seemed like the ESOP solved some key objectives for the company and getting some liquidity for a selling shareholder, avoiding some of the pitfalls of private equity. But also to me, it really seemed that pairing EOS with an ESOP helped build that ownership mentality among the rank and file employees, and also kept everybody accountable to make sure that they're all rowing in the same direction. You know, Legacy Utility Group being in the construction industry, I'm wondering if more companies of this nature might find success with an ESOP. Are you seeing anything like that in the marketplace right now?
Yeah, absolutely. And, love the story of Legacy Utility, what Dave just shared. We're seeing that across the industry. A lot of companies in a similar situation where it's the partner is continuing. One partner wants to retire, wants some liquidity, succession, et cetera. Maybe it's a second or third generation company. What are your options? And we always like to say if the company is better off independent, go ESOP. You don't need to sell to a third party or merge or what have you. So that was certainly the case here. Walking through the reasons why, culture, big part of it, their moat, and of course their growth plans here and the fact that they've emerged as a leader in their space. Yeah, so we're seeing a lot of construction, trades, and adjacent companies use the ESOP structure, for all those reasons to solve those key objectives. And, like to say, hey, if you build things, you should have skin in the game, and that's always a nice win-win overall, for everyone involved.
Absolutely. And what a way to end it. Having skin in the game is so important, and this gives everybody a little bit worth fighting for.
Exactly. And I thought it was interesting, Ben, with the combination of the EOS with the ESOP, and, of course, the ESOP, it's a equity tool, right? It's an owner, but it's also employee incentive, giving employees skin in the game. So you solve that piece of the puzzle. The next one, specifically for legacy, is using the EOS, for management, right? Management planning, for those long-term goals, and execution of those goals and really accountability. So I thought that was interesting overall and, a good combination at the end of the day, because if you just go ESOP without solving the other piece, right? It's like, okay, you solve one piece of the pie, the equity piece, but, what about those long-term goals? Making sure the company is performing, and on top of that, accountable, right? So that's an interesting one and definitely seeing more of that out there.
Absolutely. So for those companies that are curious, let's say, where can they find more information about, what even is an ESOP, or how do I get in contact with someone from Menke?
Definitely, yeah. So reach out, go to Menke.com. You can also follow myself. I'm on LinkedIn, Trevor Gilmore. I post a lot about ESOPs. We try to be objective, ESOP education, ESOP 101. We also have a monthly webinar series as well, specifically for business owners. You can hop over to Menke.com, sign up, and register free of charge, no strings attached, just pure education.
Great. That's a valuable resource. And I'm on LinkedIn as well. It's Benjamin Spadt. I'm a pretty unique last name, so it should be easy to find. But I do post a lot of ESOP content as well. And yeah, thanks for joining us today and look forward to more of these in the future.
Thanks everyone for joining. Hope you learned something new today. Stay tuned for more episodes. Take care.
Bye-bye.